platforms. All right, guys, thanks for being here again. Rosenthal Capital, ARMR Report is what you're listening to. This show is going to be about trading today during Trump tweet hysteria, investing during Trump tweet hysteria. So let's start with the algorithms. I spoke to you guys on Friday. I talked about how we were handling it. No stops necessarily on any of our longer term S&P, NASDAQ, small cap strategies. On August 1st, we did have, yes? Tied up right now, guys. Not right now. All right? I'll talk to you later. Thanks. If you look at our website, rosenthalcapital.com, you're going to see right on that homepage where you land a couple of tools for you to help you manage risk. One's the risk monitor. The other is literally a view of what we're doing in our 4 interactive brokers model portfolios. And on the 1st of August, the algorithms for the Dow and the momentum index went to cash. That was Thursday as the market was imploding. Okay? Our other indexes have more lenient stops. And over a long period of time, 15 years, let's say, having a more lenient stop generally allows you to see a greater increase in your net worth. We can always have tighter stops and trade more frequently. Or we can try to manage risk by reducing positions. And if you look at the website, we say right on there what this means, that the Dow and the momentum indexes are back into cash. You know, look, if you're literally owning those indexes, you can raise cash and just sell them. But what it really means is, and I tried to convey this on our website, is that when we see those type of things get triggered, we look to tighten up our portfolio and reduce risk. However you would take that information in, you have to figure that out for your own risk management, your own portfolio. Since I don't know you, I couldn't say, oh, raise 50% cash. I don't know how much cash you like to raise. Maybe you want to hold long-term all of your investments and you only have, let's say, 25% cash as your max cash position. Well, okay. What I'm saying is when we have the Dow and the momentum index go to cash, then let's say you only have 5% cash in your portfolio. Maybe you double it to 10. Maybe you go 15. You see what I'm saying? So you use these algorithms to guide how you raise cash and how you book profits. So it doesn't stop us from losing money in the last 48 business hours. I mean, let's be honest. Unless I'm literally day trading and I'm cash at the end of every day, which I do for one of my portfolios, but we're losing money right now, just like everybody else. You know, we have conservative, balanced, and aggressive portfolios. So the aggressives are losing more, the conservatives are losing a little bit less, but they're all losing money. If you think about it, like almost 48 hours ago, the market was at the highs of the year. The market had recovered from the Fed announcement. The NASDAQ was about to break out to new highs. And at 1:30 on Thursday, Trump made a tweet about the trade war. And almost 48 hours later, business hours, the market's imploded. Everybody's talking about we have a crash coming. There's a collapse here. I mean, step 1 today, how do I trade and invest in the midst of this type of hysteria? Step 1, here's a trade secret for you. On a day like today, on my trading desk, I do not have a single TV on. I'm not watching CNBC. I don't care what they say on Bloomberg. You need to zen the situation, focus on your strategy, get rid of all the hysteria. Okay? That's important. That's really important today. If there was one piece of information you took away from this conversation with me today, it's to do whatever you have to do to reduce the hysteria. Maybe it means you take 15 minutes to do a little yoga. I don't know. I like to go walk the beach. I live across the street from the beach. I go walk the beach in the morning before the hysteria starts. But what we can all do is turn off CNBC and all the talking heads that are screaming the end of the world's coming. Or the other guys who are screaming, buy everything. This is a great buying opportunity. None of that stuff should have any impact on how you manage your money today. So I come into today. I did reduce positions last week, but not nearly enough. I mean, I'm losing money, right? This is an honest trading desk. I share with you my victories and my pain so you can learn from my successes and my failures. That's what I'm trying to do for you. Over time, we're going to have a lot more success than failure. But it would be disingenuous and an outright lie if I pretended that I always make money. Okay? So what I do with those algorithms is I reduce positions last week. Then the market implodes because of the Chinese response over the weekend that they did some things with currencies that really weakened the euro. And that kind of threw the market into disarray. And so that's led to losses in my portfolio. It happens. There's nothing you can do about it. Unless you want to be a day trader or unless you want to trade just real quick extremes. You could certainly do that. But what I'm trying to do with my personal portfolio and for people that I run money for is I like to build a blended approach over time. So some of my positions are longer term in nature, and I'm not just selling them because Trump has a tweet about China and the market implodes. Well, if I'm not just selling them for those reasons, then I am going to lose money on days like today. Nobody likes it, but that's the way it is. So now I got to figure out from here, how much risk am I willing to carry into tomorrow? Chances are, if there's no recovery in the market today, all of our algorithms are going to tell us to be in cash, which is the most dangerous time. Now, you might say to me, that didn't help very much because in 48 hours, the market dropped, I don't know, 5% or something. And you're right. I mean, sometimes it doesn't help that much if you get a strange event that wrecks an uptrend with no warning coming into it. Now you could say, well, Trump made that tweet. We could have sold everything. Well, that's true. But if you'd done that over the last 3 years, you would have missed massive upside in the market. There's constant tweets and constant shakeouts in the market. And for all we know, this market might be higher into the close because of another tweet. So I can't run money, nor should you, based on somebody's tweet and then trying to guess what that means going forward. All I can do, and what I do every day, is I use algorithms to improve my probability of success. So even if the algorithms are going to be right 7 or 8 times out of 10, I'm still losing money 2 or 3 times. This may be one of those times. I held an extra day because I don't just panic over a 24-hour period because of a tweet. But the reaction to the news is more important than the news. So if we crater through the 50-day moving average, which is what we're doing on all the indexes now, and even whatever offset you might use as a stop below the 50-day, I mean, it's blowing through it. So unless there's some kind of spirited rally in the afternoon, across the board, the algorithms are going to say we have to be 100% cash. Or what that means is whatever your cash allocation is. What yours is different than mine. Some portfolios, I might be 100% cash. Others, that might mean I'm carrying 50% cash. Which brings me to my next point. Let's parse the details a little bit about Trump and China and the trade war. This doesn't mean these stocks can't go down, guys. Look, when the market implodes, if that's what's going to happen, everything goes down at once. We have a high correlation in the markets today. So take what I'm about to say with a grain of salt. But fundamentally, if the trade war gets worse, then that means the Fed gets more lenient. That means we see more rate cuts. in the race to devalue currencies, in the race to negative interest rates. So the investments that will do well over time are going to be the dividend payers, AT&T, Verizon, the utilities, Duke, Southern Company, Dominion, any of those names. Find your favorites. Those are the names that will generally outperform when the market's imploding, which means the Fed's going to come out there and cut rates more and add liquidity. Don't forget, the Fed just cut rates and stopped reducing their balance sheet. This gets ugly enough, they're going to cut rates again and start increasing their balance sheet. We've seen this story before. So when all of our algorithms tell us 100% cash, it means be your most defensive. I may be carrying some dividend payers, a lot of cash, and then I'll be using intraday techniques to try to increase my performance versus the indexes in the midst of the selling. I don't know. We'll have to see how I handle it. There's different accounts that I manage. We'll manage them differently. Some more aggressive, some carrying more cash, some less. But in essence, the worse the trade war gets, the more aggressive the Fed's going to be, which always leads to higher equity prices. Now, you want to tell me this time's different? Okay, you go bet on this time being different. I like to put money to work where the probabilities of success are dramatically in my favor and the reward is worth the risk. So betting that this time is different doesn't work for me. Maybe it works for you. Maybe you like to go to play craps and, try to roll snake eyes all the time. It doesn't work for me. I'm a 6 and 8 kind of guy. Okay? All right. Let's talk about day trading in a market like this. It can be an ideal market to day trade. I'm going to talk to you guys on Wednesday. We're going to do a how-to live stream. And we're going to talk about day trading and setting up the right stop losses. I've been getting questions from subscribers about that issue. You guys hear me talk about stop losses and protecting capital almost ad nauseum on all of these live streams. So even when I'm telling you, I'm looking at, let's say, the energy sector. God, I got ripped on that one, right? Not a good idea. Didn't work. I was in those stocks for a day, right? Put the positions on, it had to stop. It went below it, I got out. That's just the way it goes. I look for probabilities and statistics. I look for where the reward's worth the risk. But I always use stops. And what I'm getting from a lot of you guys in the audience, subscribers, is that you're not using one, you're not using stops, and two, you're not exactly sure how to set them up. So we're going to do, how to set up stops. We're going to talk about that on Wednesday. I've been sharing with you the day trading algorithm equity curves. We have two strategies, one for the NASDAQ 100, one for the S&P. It's almost like a cash management strategy for us. What we're looking for is extremes. We buy extreme weakness and then we sell at certain levels on the way up into strength. Today is a perfect example. Now, this is a tough day, so I'm not sure we're going to net a profit on this one. But extreme weakness happened this morning. So the reward's worth the risk when the right setup occurs. And then the stops are tight. And we see if we get a bump higher or not. So I'm going to wrap this up pretty quick here and look forward to talking to you guys again on Wednesday. It's a little disjointed. You can understand my conversation with you is a little disjointed today because there's just so much going on around me. And I'm managing many different trades as I'm trying to speak to you. So thank you for bearing with me today. But I guess I'll just wrap it up. I'll just wrap it up there. Let's see what the algorithms say at the end of the day today. And on Wednesday, I'll share with you how we've restructured our portfolios based on the algorithms and step by step how we set up stops. In the meantime, if you have any questions for me on Wednesday, please feel free to email them to me, direct message me on Twitter so I can try to answer these questions about stop losses that are particularly interesting to you. Also, don't forget to sign up for our ARMR Report Action Alert. It's on our website. We'll be producing one today, probably going out tonight, maybe tomorrow. So you're going to get some information from that action alert that I'll be talking about on Wednesday. So it would behoove you to sign up for that. Just go to our website, rosenthalcapital.com. When the box pops up, just give us your email and we'll send out. It's a free ARMR Report Action Alert we put out periodically when major changes occur in our algorithms or in the investing community. And no doubt major changes are occurring right now in the last 48 hours. Okay, so I look forward to talking to you guys on Wednesday. Thanks for being here today and be safe out there, okay?